Let's talk about becoming unbreakable when it comes to finances. Financially unbreakable investing. Let's talk about the age-old principles that allow investors to succeed despite the market cycles. All right, so in the last 10 years, we've seen the market change faster and more often than what any of us ever expected. So we've seen people say things like interest rates are too high, properties are really hard to find, deals are not coming by, everything is overpriced, properties are getting foreclosed. Is this a good time to invest? Is the market about to crash? Should I buy? Should I wait? We've heard all of these things in the last 10 years again and again. And so the question that constantly comes to mind is this the right time to invest? And what I want to do today is I want to reframe that question. Reframe it from should I buy, should I wait, should I sell, what should I do, to how can I take the next 5 years and make them the best 5 years for my family's wealth. Forget all of the rhetoric, forget all of the different things you hear in the industry that are leading you to analysis paralysis, and focus on the main goal of generational wealth, passive income, and time and location freedom. What can we do in the next 5 years to make our family's finances unbreakable and build wealth? That's what we're going to talk about today. In trying to keep up with the changing market, what people have forgotten is there are fundamental principles of finances that have been implemented for decades and they haven't failed the investors. These principles are timeless, and the investors that have focused on these fundamentals have been successful. Let me start with a question. What is the image that comes to mind when I talk about someone being wealthy, someone being rich? Things like expensive cars, fur, diamonds, mansions, maybe somebody drinking expensive champagne on their jet. So many different things come to our mind when we kind of think about a rich person. But I want to tell you, these are feathers of a peacock. These are things that stroke your ego. But if you think about it, if you think about the wealthy people that you know who have had generational wealth for a long period of time, this is not how they live their life. Take an example of Warren Buffett. This is the house that he lives in. This is not a mansion. This is a house he bought years ago, and he still lives in the same house. And he's one of the richest people on the planet. Think about Mark Zuckerberg. He wears the same clothes every day. He owns a whole bunch of the same outfit, right? So when you think about a rich person, a truly wealthy person who's successful, all of these images that come to mind, that's not what they're doing. So what we're going to talk about is what are they doing? So I don't know if you've heard the term the working rich. These are people, and I was one of them, who have high-paid jobs, doctors, I was an engineer, lawyers, people who have really, really good income, but they are only rich until they're working. What they're doing is they're putting all of their efforts into having an amazing income 90% of the time. And then 10% of the time, they have an amazing life where they get a really nice vacation. Maybe they have some time with their kids. They do what they really want to do. But 80-90% of the time, they are stressed out. They're working hard. They're doing what somebody else is expecting them to do. That's the kind of life I lived. This is called a working rich. But real wealth cannot be seen. Real wealth is not about spending money. It's about having the time to do what you want to do and being able to keep the money that you're making. That's what real wealth is about, because it doesn't matter how much you make. What matters is how much you can keep. That is what's going to build wealth. So we're going to talk about the 3 pillars of wealth today. These are fundamental principles that are timeless and that have gotten investors good results for decades. Number 1, it is not about timing the market. It's about time in the market. Don't try to time the market and try to find that spot where if you buy, you are going to become millionaires if you just buy at the right time. It's not about that. It's about time in the market. If you look at real estate prices in the last 100 years, how they've been going up, what you see is that maybe they go up and down when it comes to short term. But when you look at it long term, these prices are continuously going up. And when you focus on the long term, about the time in the market, that's when you realize that in trying to worry about whether you're going to invest in the low spot in the market versus trying to invest at the peak, if you'll stop worrying about that because you're in the market long term. Another thing to understand is money is literally losing value sitting in our bank accounts. As I'm talking to you right now, as you're watching this video, our money sitting in our bank accounts has already lost value. That's because of inflation. And the only way to make sure that our money doesn't lose value is by investing it. And I talk to a lot of people who are very responsible with money. And that's how I was. I'm an engineer. We're inherently very conservative with money. That's just the kind of personality most engineers have. And so what happens is you forget that being frugal and being really good at saving and being responsible with money, that alone doesn't build wealth, because savings, it's losing value just sitting in our bank accounts right now. So basic financial common sense is you need to know what your income is, you need to know what your expenses are, and your income and your expenses should always have a difference. Your expenses should be lower than your income. And that difference is what you save. Take those savings and invest them. Find out how you can make that money work for you. A lot of people who are very responsible with money don't understand this missing link. And that is what stops them from building wealth, and they end up being the working rich forever and ever. Second, stack your assets like pancakes. If you look at a stack of pancakes, that's how you want your asset base to be. You want to constantly build assets, and you want to scale the assets that you have. The reason being that real estate investing has 4 advantages. Number 1, cash flow. Second, appreciation. Third, debt pay down. And fourth is shelter from taxes. And these 4 elements have the most impact when you stack your assets like pancakes. Number 3, there is no magic bullet. Now think about the time when you wanted to get healthy. It is so exciting to go find a fad diet and just think that you're going to get the results in 2 weeks. I remember somebody once told me about this diet called the cabbage soup diet. There is juice cleanses, there is paleo, Atkins, all kinds of different things. But we know what works is consistency. You watch your calories and you get some movement in. And that consistency is what leads you to better health. Same thing with investing. Instead of following the shiny objects, focus on a strategy that has been implemented for decades in the past and gotten people results. No magic bullets, because just like fad diets, they don't work. So we discussed the 3 pillars of wealth today. Number 1, money is literally losing value sitting in our bank accounts. Invest it. And it's not about timing the market, it's about time in the market. Number 2, stack your assets like pancakes, because there are 4 advantages to real estate investing: cash flow, debt pay down, appreciation, and tax shelter. And number 3, focus on consistency over magic bullets. So if you look at real estate, and I'm going to show you a chart real quick. All right. So delete everything from, so if you look at real estate home values in the last, this is a